And so this is a good sign. The more gold moves up, it actually tells us we're getting, I think, closer to an economic reset, a financial reset. And gold is kind of that global barometer where everyone around the world sees it as a way to store value and to get out of the stock market, to get out of real estate, and to keep your money out of the banking system because they could go back.
You're watching Silver News Daily. Subscribe for more.
Silver is standing on the edge of history, and the next move could change everything. For years, it has been the underdog of the precious metals market, overshadowed, underestimated, and artificially suppressed. But now, a perfect storm of economic chaos, financial reset speculation, and skyrocketing industrial demand is brewing, and silver is right at the center of it all. The stakes have never been higher. Will silver finally explode past expectations, shattering records and proving itself as the ultimate asset in a time of crisis? Or is a catastrophic collapse lurking beneath the surface, waiting to catch overzealous investors off guard? We've seen this story before. In 1980, silver rocketed from under $6 to nearly $50 in just months. In 2011, it surged again, following gold's lead, only to be crushed by market manipulation and investor panic. And today, with central banks shifting away from the US dollar, inflationary pressures mounting, and silver's industrial role becoming more critical than ever, the pieces are aligning for another historic move. But in which direction? That's the billion-dollar question. Financial markets are on edge. Global debt has ballooned to unsustainable levels. Geopolitical tensions are rattling economies. Interest rate cuts are coming. And whispers of a financial reset are growing louder. Some believe silver is about to experience a supply squeeze unlike anything we've ever seen, forcing prices into uncharted territory. Others warn that economic instability could trigger a liquidation event, sending silver tumbling alongside everything else. So, what's the truth? Are we standing at the edge of an explosive rally, or is silver about to face its most brutal test yet? Stay with me, because by the end of this, you'll see exactly why silver's fate in 2025 is the most important story in the financial world right now.
Sure. Yeah. It is exciting. Gold's on a run. I think it's going to push up still quite a bit higher. In fact, if we take a look at the charts, and gold is on a breakout. So gold has gone through a series of stair-stepping price actions higher. So we've had rally and pause and a series of these big rallies and pauses. And now we're starting at the next rally phase. And just based on the momentum here, and if we use Fibonacci extension, which is one of my favorite technical tools, we can get a gauge of how strong this upward momentum is, where price should pause, where it should hit the next key target. And so we can figure that out by understanding how strong this last rally was, the strength of the pullback that we saw back in November. And then we can project that forward to where we think that price or where price is now. And so more or less, there's two key levels when we look at gold and using Fibonacci extension. And the first one here is a 618, meaning 61% of this rally that we saw previously is going to be the first area where it starts to chop around and struggle a little bit. It hit that price level 2 days, had some big pullbacks from that level. Now it's kind of broken above it. It came back down and tested this level. And that is a good sign. When something shows a little hiccup on the chart at the 618, we almost always go up and hit the 1 level, which is a 100% measured move, meaning the strength of the first rally will be the same percentage-wise or same move on the second rally. And so that is where we're headed. And that brings us to about 3,050 for gold. And so we still have some pretty good upside potential from where we are. That is about a 5.5%, 6% move. And gold to me is kind of the ultimate play at this point when we're in a late stage of a stock market where I think the stock market and the economy getting very close to a top. This is when we see gold come to life. And gold has been rallying and leading the way for the past year or so, just kind of flying higher. And so this is a good sign. The more gold moves up, it actually tells us we're getting, I think, closer to an economic reset, a financial reset. And gold is kind of that global barometer where everyone around the world sees it as a way to store value and to get out of the stock market, to get out of real estate, and to keep your money out of the banking system because they could go bankrupt. And that's why physical gold, I think, is doing well. is because people are they're preparing for what could be another big, market correction. And there's a lot going on with big money or big gold, physical gold moving to the States. I think that's got people rattled as well. So I like gold. I like it more than everything else in the precious metal space. I like it much more than silver. I like it a lot more than miners. To me, gold, physical gold, is the play right now.
Silver isn't just a precious metal. It's the backbone of the modern industrial world, and right now, demand is accelerating at an unprecedented pace. The global economy is shifting toward renewable energy, electric vehicles, and advanced technology, and silver is the one metal that these industries cannot function without. Unlike gold, which is hoarded as a store of value, silver is being consumed at an extraordinary rate, and the supply simply isn't keeping up. Take solar panels, for example. Silver is a critical component in photovoltaic cells, and with governments around the world pushing aggressive green energy policies, solar demand is surging like never before. In fact, silver's role in the solar industry has already driven annual consumption to record highs, and experts predict that this demand will only increase in the coming years. But that's just the beginning. The electric vehicle revolution is another game changer. Every EV on the road requires significantly more silver than a traditional gasoline-powered car, and with automakers ramping up production, the silver supply chain is being stretched to its limits. Then there's the 5G boom. The rollout of next-generation wireless technology depends on silver's unparalleled conductivity, making it an irreplaceable component in high-speed communication networks. And as artificial intelligence and smart technology continue to expand, silver's industrial demand is set to skyrocket even further. But here's the problem. Silver mining production isn't keeping pace. For years, silver has been extracted as a byproduct of other metals like copper, zinc, and lead, meaning miners aren't focused on increasing silver output. With fewer high-grade silver deposits being discovered and existing mines struggling to expand, the market is staring down the barrel of a massive supply crunch. And when demand overwhelms supply, there's only one way for prices to go. Straight up. The big question is, how long can this imbalance continue before the market cracks? If industrial demand continues to surge while physical silver supplies dwindle, we could be looking at a price surge unlike anything we've seen before. But silver's fate isn't just tied to industry. There's another force at play, one that could send shockwaves through the market. Central banks are making a historic shift, and it's setting the stage for silver's next major move.
Yeah, I don't know. I mean, I don't dive too deep into those big moves when it comes to like big money shuffling around. I mean, the markets are somewhat rigged, right? And there's a lot of manipulation going on. And there's a million conspiracy theories around pretty much everything, especially in the United States and around gold. So I don't know how to gauge it. I try not to go too deep because it's a dark rabbit hole and it can consume you. All I know is it seems kind of fishy. And I think it means something's coming down the line that we don't know, whether it's tariffs or something to do with gold or currency, or I don't know. But it has, I think it's all we need to know is it's a warning sign that there's something going on. The U.S. wants gold, physical gold in their country. And to me, it's a warning sign, meaning something's up and you've got to own gold. So I'm not sure how to really look at it other than people want their physical gold and because they believe something, they don't trust it where it is now, or they want it in their hands.
For decades, gold has been the metal of choice for central banks. But now a quiet revolution is unfolding, one that could send silver soaring to levels no one expects. Around the world, central banks are moving away from the US dollar, accumulating precious metals at a record pace, and laying the foundation for a financial reset that could reshape global markets. But here's the twist. While gold has been the main focus, silver is the wild card that could see the most dramatic gains. Why? Because silver has always been the more volatile counterpart to gold. When gold moves, silver moves further. Historically, when central banks increase their gold reserves, silver follows with even more exaggerated price swings. And right now, we're seeing the biggest accumulation of gold by central banks since the 1960s. Countries like China and Russia are leading the charge, aggressively stockpiling gold in an effort to de-dollarize their economies. The message is clear. The global financial system is shifting, and precious metals are becoming the ultimate hedge. But here's where it gets interesting. If central banks continue down this path, gold prices will rise, and as history has shown us, silver will eventually explode higher as well. The gold to silver ratio, a key metric used to measure silver's relative value, remains at levels that have historically signaled massive silver rallies. When this ratio corrects, silver doesn't just climb, it skyrockets. And let's not forget investor sentiment. With central banks loading up on gold, institutions and retail investors are starting to wake up to silver's potential. If institutional capital begins to flood into the silver market, the effects could be extreme. Unlike gold, silver's market is much smaller and more thinly traded, meaning it takes far less money to trigger explosive price movements. The question isn't whether silver will follow gold, it's when. And with whispers of a financial reset growing louder, the window for silver to make its move may be closing fast. But before we jump to conclusions, we need to look at what's happening in the silver futures market, where a shocking surge is sending signals that cannot be ignored.
Yeah, I mean, I just saw a report on it saying that the U.S. has called a ton of gold from the U.K. reserves, like London or something, and they're like, and London's like completely empty. They can't even get delivery of gold. So, I mean, I don't know the fine details. I don't dive too deep into it, but I've heard a lot of people talk about it. And it seems to be a big thing. So I think it's the United States themselves bringing physical gold over to store it. So I don't know what it's about. All I know is there's a lot of physical gold shuffling around, and countries are loading up on it. Not so much the individuals, as you said. And so I think that just goes to show if leaders in countries are starting to stockpile it and reshuffle it around so it's on their own ground, that is a sign that I think they see chaos coming. And I mean, the perfect example for the power of precious metals is a few years ago, we had the internet go down in Canada. And there was only like a handful, like 5 internet providers, and Rogers, the biggest one, pretty much powers almost everywhere in Canada. It went down, and I had to go in town to find internet so I could do a morning report for my subscribers. And you couldn't do anything because the internet was down. And a guy came up to me, he goes, "Chris, you wouldn't believe it." He goes, "I just filled my car up with gas with 2 silver rounds." And it's funny because as soon as the internet goes down, the only thing that has value, or the only 2 things that kind of have value, is like physical metals, because you can't use the internet, and then like obviously weapons, force, Bitcoin, crypto. None of that stuff works when the internet goes down. And I would think we're going to be more so if war and difficult times ever hit. I mean, the internet's probably going to have problems. We're going to have like power outages. We're going to see all kinds of, who knows, EMPs, magnetic pulses, all of these things. So physical metal is such like the old barbaric way of storing value. Like all I think is like horses and castles, right? But it really is the ultimate thing. When push comes to shove, gold and guns is really where it's at.
Something big is happening in the silver futures market, and the signals are impossible to ignore. In a single trading session, COMEX silver shot up nearly 4%, while SHFE silver in China broke above 8,200 yuan per kilogram, levels not seen in over 3 months. Traders and institutions are piling into silver contracts, and the question on everyone's mind is whether this is the beginning of something historic or just another speculative surge before a pullback. Historically, sharp spikes in silver futures have been early warning signs of major market shifts. When silver futures start running, it means big money is moving. Hedge funds, institutional traders, and even central banks could be positioning themselves for a larger trend. And this isn't happening in isolation. At the same time as silver's spike, COMEX gold is climbing toward $3,000 per ounce, signaling that investors are bracing for economic turmoil. So what's fueling this surge? A major factor is the U.S. tariff policy, which is sending shockwaves through global trade markets. With the threat of higher import costs, inflationary pressures are rising. And that's exactly the kind of environment where safe haven assets like silver thrive. Add to that a weakening U.S. dollar, and you have the perfect setup for silver to break out. But here's the key. This isn't just about speculation. Rising silver futures prices are starting to impact the physical market. As SHFE silver crossed 8,200 yuan, downstream buyers hesitated. signaling that industries relying on silver are already feeling the pressure. If this continues, it could create a feedback loop where demand slows temporarily, only to explode later when companies are forced to secure supply at even higher prices. What we're witnessing is the early stage of a potential silver squeeze. The futures market is moving ahead of the physical market, and if this trend continues, silver could enter a phase of extreme volatility. But futures and speculation are just one piece of the puzzle. To truly understand where silver is heading, we need to examine the broader economic picture. Tariffs, inflation, and monetary policy are all playing a role, and their impact could determine whether silver's breakout is sustained or short-lived.
For sure. I think, having the real thing is the key. You really can't trust others all the time. And, when things get real difficult, that's when you really can't count on people because people change under pressure and duress and stress and all that stuff. So physical, having some on hand, having a bunch stored away outside of the banking system, I think is pretty good.
Silver's fate isn't just being decided by investor sentiment or industrial demand, it's being shaped by global economic policy. Right now, three major forces are colliding: U.S. tariffs, surging inflation, and central bank monetary policy. Each one alone could send silver prices soaring or crashing, but together, they're creating a market storm unlike anything we've seen before. Let's start with tariffs. The U.S. government has reignited trade tensions, introducing aggressive tariff policies that are shaking global supply chains. Historically, tariffs have led to higher import costs, supply shortages, and rising inflation. But here's why this matters for silver. Whenever trade uncertainty increases, investors seek out safe haven assets. And as we've seen before, silver, often overlooked at first, tends to follow gold's lead in times of economic distress, but with far more explosive price action. If the tariff war escalates, it could push more investors into precious metals, creating a new wave of demand. Then there's inflation. The latest data shows that U.S. producer prices have risen faster than expected, with January's PPI climbing 3.5% year over year, the largest increase since early 2023. This is a clear warning sign that inflation is still running hot, and historically, silver has been one of the best performing assets in inflationary cycles. If inflation continues to surge, silver's status as a hedge against currency debasement becomes even more critical, potentially driving prices far beyond current levels. But the real wildcard is central bank policy. Right now, the Federal Reserve is caught in a delicate balancing act. While inflation remains persistent, there's growing pressure to cut interest rates as economic growth slows. Futures traders are already pricing in multiple rate cuts by the end of the year, and if the Fed moves aggressively, it could weaken the US dollar significantly. And when the dollar weakens, silver strengthens. However, there's a risk that many are overlooking. If inflation proves to be stickier than expected, the Fed may be forced to hold rates higher for longer. This could create short-term headwinds for silver, as higher interest rates often boost the dollar and make non-yielding assets like silver less attractive. But in the long run, even a strong dollar can't change the fundamentals. Silver's supply constraints, rising industrial demand, and central bank accumulation are all pointing to one thing: volatility. Silver isn't moving in a vacuum. The global economy is shifting beneath our feet, and how central banks respond in the coming months could determine whether silver finally breaks out or faces another brutal correction. But monetary policy is just one piece of the puzzle. There's something even bigger brewing. Silver's supply is shrinking, and the market is about to feel the impact in ways few are prepared for.
Yeah, I mean, if we take a look at the silver over the last couple of years here, from 2023 on, it's had a really nice move. As you mentioned, yeah, it's similar. It's had a series of kind of rallies and pauses. We've had a rally up, a big pause, another rally. We're kind of in a big pause. Now, silver is a lot more volatile. It's a noisier, it's an uglier chart. It works well when you're on the right side and it takes off, but it's a chart that's will shake you up. If you're a short-term trader trying to get in and out of precious metals, silver make you pull your hair out. But it does perform exceptionally well. Gold typically kind of leads the way. And then we'll see silver kind of kick in usually a little bit later. Now, when we zoom out, obviously, on silver long term, it's nowhere near the highs that we've seen in the past. It has definitely turned a corner. It was out of favor for a very long time. And really, 2020 is when it kind of came to life. It's carved out a bottom and it's building a launch pad to go higher. I think we could see silver go back up to about 35, maybe even like 37, 37 and a half, somewhere in there, potentially over the next month or so. But overall, it is a real volatile one. I think the safer play is gold, simply because I do think we're going to eventually get into a market reset, a financial reset. And I do think we'll see precious metals get into a little bit of selling, and gold will hold up way better than silver. So I think from an investor standpoint, gold is the play to be in.
Market. For years, the industry has been running on a fragile balance, mining production barely keeping pace with demand, while recycled silver helped bridge the gap. But now that balance is breaking. Global silver production is slowing, industrial consumption is surging, and investor demand is intensifying. If this trend continues, we could be looking at one of the most extreme supply shortages in modern history. Here's what's happening. Recent data shows that silver production dropped 4.9% month over month in January, despite being up 9.3% year over year. Why? Because many producers rely on recycled silver. And as economic uncertainty grows, fewer people are selling their silver back into the market. At the same time, mining companies are struggling to expand operations. Unlike gold, which is mined with a strong focus on output, silver is often extracted as a byproduct of other metals like copper, lead, and zinc. And with global mining projects facing stricter regulations, labor shortages, and declining ore grades, silver production isn't keeping up with demand. Meanwhile, industries that rely on silver aren't slowing down. We've already discussed how solar panels, electric vehicles, and 5G networks are eating up silver supply at record rates. But there's another factor at play: geopolitical uncertainty. As global trade tensions rise and central banks move toward de-dollarization, countries and large institutions are beginning to hoard physical silver. The spot market is already showing signs of strain, with downstream buyers hesitating to purchase at current prices, fearing that higher prices are just around the corner. And then there's the investor side of the equation. If retail and institutional demand spikes, especially if a financial crisis or inflationary panic unfolds, physical silver could become even harder to source. We've seen it happen before. In 2021, a coordinated buying effort led to shortages in bullion dealers worldwide, sending premiums on physical silver soaring. If a similar rush happens again, but this time with supply already at critically low levels, silver prices could be pushed to extremes. The real question is, how long can the silver market handle this pressure before it cracks? When supply shortages collide with rising demand, the result is often an explosive price move. But we've seen this before. Silver's history is filled with dramatic booms and devastating busts. And if history is any indication, we could be on the verge of something massive. But to truly understand where silver is heading, we need to look at past super cycles, moments in history when silver defied expectations and delivered once-in-a-lifetime gains. And if the patterns we're seeing today hold true, silver's biggest move may still be ahead of us.
It has upside. It's going to hold its value a lot better. And then if and when, which I think it's more so when we have a market financial reset, then everything's going to reprice a bit. Silver is very volatile, so it will actually correct severely. It could be 30, 40, 50, 60%, like it did in 2008. And then you've already, gold will hold its value a lot better, but then you can invest in silver and accumulate and start stacking it at a really good rate. So to me, with what's going on in the world, I think gold's going to hold up the best, has more upside and a lot less downside. And silver becomes the investment later when it's more or less feels like it's on sale at a sharp discount.
And what do you anticipate for the stock market? Because I know last time we had you on, you were, I believe, sharing, big concerns for what we were seeing in the stock market and the possibility of kind of a reset or crash coming. Where are we right now? It seems like we're still pretty close to all-time highs.
Yeah, we are. The market is slowly getting weaker in the grand scheme of things. I believe we're in like a kind of a key topping phase. I think we're very similar setup to kind of what we saw back over here in terms of we're running out of momentum. We're starting to see a lot of poor earnings. We're starting to see, non-farm payrolls weren't very good this week. We're starting to see a little pressure there. So overall, when we even look at the semiconductor space and Nvidia, some of these big powerhouses, they're running out of steam. They've lost their upward momentum. They're not participating. They're not really even leading at all either. So that's not a good sign because they carry the good chunk of the weight of the stock indexes. So I do think the markets have room to push a little bit higher. I think the SP 500 could push maybe another 5% or so. I feel like if we push to new all-time highs from here, we've just had actually a pretty major cycle low in the chart over the past few weeks. Or if I was to just zoom into the SP 500, we've had a couple very significant cycle lows, which they don't show on this chart, but we had a multiple time cycles bottom out here, which was just a few weeks ago. We also had that happen over here. We had it happen over here, and we had it happen over here. So I think the markets are primed and ready to have one more push up, and then I think we could run out of steam. We've had a really good correction, and now we got a nice bull flag pattern here. This whole pause is actually building up energy that if it breaks to the upside, we're going to see a nice run. It's going to suck up.
Silver has always been the wild card of the precious metals market, quietly accumulating strength before unleashing explosive history-making rallies. And right now, all the signals are pointing toward another seismic shift. If we look at past silver supercycles, we see a pattern that repeats time and time again. Silver lags, consolidates, then skyrockets with violent speed. Take 1980, for example. Silver was trading under $6 per ounce before a surge in inflation, monetary uncertainty, and supply constraints sent prices rocketing to nearly $50 in just a few months. The result? An 800% gain in less than a year. Then came 2011, when silver once again followed gold's rally, soaring from $9 to nearly $50 as investors rushed into hard assets during the fallout of the global financial crisis. Both times, silver outpaced gold in percentage gains, proving that when silver moves, it moves fast. Now, let's compare those past cycles to what's happening today. Inflation? Check. Central banks aggressively accumulating gold and de-dollarizing? Check. Industrial demand at record highs? Check. A weakening dollar and looming economic uncertainty? All signs point to yes. Every factor that triggered silver's historic rallies is back, and this time, the setup is even stronger. But here's what makes this moment different. In the past, silver's super cycles were largely driven by investor speculation and monetary instability. Today, we have an added force, industrial demand, which is consuming supply at an accelerating rate. Unlike in 1980 or 2011, silver isn't just a store of value, it's a critical component in the global push toward renewable energy and high-tech industries. That means even if financial markets remain calm, silver still has a fundamental case for long-term price appreciation. However, history also warns us that silver's journey is never a straight line. Before every major rally, silver faced brutal volatility, sharp pullbacks that shook out weak hands before the real move began. This time will likely be no different. If silver does break out, expect price swings, market manipulation attempts, and short-lived corrections along the way. But if history is any guide, those who understand the cycles and position themselves accordingly stand to gain the most. The stage is set, the conditions are aligning, and silver is standing at a crossroads. The question now is simple. Will this be the breakout that finally propels silver beyond its historic highs? Or are we staring down the barrel of another market shakeout? The answer lies in the financial reset unfolding before our eyes.
A lot of people into the market. It's actually very similar to this one, where you have a big pullback and then you have a bull flag, and then of course it ran higher. We had the same over here. It pulled back. We had a bull flag. It had a little bit of a shake up here with some news and Trump and stuff, and then it took off to the upside. So the markets are primed and ready for another leg higher. Yet a lot of people are moving temporarily here, kind of pretty nervous. Longer term investors like people 50 plus, they've been dumping and selling dividend stocks. People are getting really nervous. But the more aggressive traders are still piling into the market. Gold miners are top performing right now. We've got the ARK ETFs doing really well. So we do have aggressive traders in, but longer term investors are nervous. And we keep seeing bouts of institutional selling on the daily chart and on the intraday chart. And what this means is if institutions are starting to sell, they're unloading big blocks of shares into the market, into the average market participant, that is a bad sign. So typically when we get to the end of a stock market, we see everybody get generally pretty excited to own equities. And the general retail public isn't huge volume. And what creates trends are what the institutions are doing. And we're seeing them unload more and more blocks of shares. And they're the ones who are going to turn the tide when they all start to think like, we need to get out of equities. We need to lighten up our portfolios even more. I think that's coming. And we're seeing more and more of this type of distribution selling, which is eventually we're going to hit a tipping point. And when all the institutions are like, well, everybody else is dumping shares but us, we need to, that's when we go from net buyers to net sellers in the market. And that big trend turns around. And we have a big correction like we did in 2022. Stock market fell like 25%. I feel like this time could be a lot bigger because I think it's going to be a major market top. But the equities market is still in an uptrend, but man, there are warning red signs, red flags everywhere that I think it's coming to an end.
The moment of truth for silver is here. Everything we've discussed, the surging industrial demand, central bank accumulation, supply shortages, inflation, and financial uncertainty, has brought us to this tipping point. The financial reset that experts have warned about is no longer speculation. It's unfolding right now. And silver? It's caught in the middle, positioned to either explode to unprecedented highs or face another gut-wrenching collapse. On one hand, the bullish case for silver has never been stronger. The gold-to-silver ratio remains historically high, signaling silver is severely undervalued compared to gold. Industrial consumption is rising faster than production, creating a structural supply squeeze. Central banks and major institutions are losing faith in fiat currencies, redirecting capital into hard assets. And if inflation persists while the Federal Reserve is forced to cut rates, silver's upside potential is enormous. But we can't ignore the risks. If the global economy slows more than expected, industrial demand could temporarily contract, leading to short-term price weakness. If the Fed delays rate cuts, a stronger dollar could suppress silver's breakout. And let's not forget market manipulation. Silver has a long history of being suppressed by large institutional players looking to control price movements. So where does this leave us? In a market on edge, where the next major move could define silver's trajectory for years to come. A breakout above key resistance levels could trigger a flood of institutional money, pushing silver toward new all-time highs. But if the market wobbles and confidence weakens, we could see another brutal correction before the true rally begins. One thing is certain, silver is no longer a forgotten asset. The forces driving this market are stronger than ever, and those who recognize what's happening now will be the ones who benefit most when silver makes its move. Whether that move is imminent or delayed, the opportunity is unfolding before our eyes. The only question that remains, are you ready? If you found this discussion valuable, make sure to stay informed and subscribe for more insights into the precious metals market. And remember, this is not financial advice. Always do your own research and consult with a professional before making any investment decisions.